help you make sense of West Africa's investment world. This podcast is brought to you by Daba, your most comprehensive platform for investing in African stocks, bonds, and managed funds. You can download the Daba app on your favorite Google and Apple app stores. We're starting this week with news that's impossible to ignore. The stock of Unilever Côte d'Ivoire continues its incredible run on the BRVM, solidifying its status as the undisputed star of the West African market in 2025. Last week alone, the share price surged by 43.50%, reaching 30,115 francs CFA. That brings its year-to-date performance to a staggering 467%. Yes, you heard that right, 467% since January. But what's really behind this spectacular rise? Is it an opportunity or a bubble waiting to burst? We break it all down in today's episode. Let's begin with the headline story. The performance of Unilever CI, a clear symbol of the speculative wave currently sweeping the market. The rally is not being driven by earnings releases or new products. No, it's driven by hope that a turnaround is coming following the acquisition of the Ivorian subsidiary by the Carré d'Or Group via its unit SDTM-CI. The idea is that this restructuring could revive operations, boost margins, and restart growth. But let's be clear, as of today, there has been no financial reporting since fiscal year 2023. Revenue is down, net profit dropped to 69 million francs CFA, and the company has negative equity. The current valuation, therefore, rests entirely on a promise, not on any confirmed operational recovery. With a price-to-earnings ratio nearing 490 times, the stock is significantly overvalued compared to market norms. What does this mean for you, as an investor? It means that if the expected improvements don't materialize, the downside could be severe. If you already hold this stock, now is the time for caution. And if you're thinking about jumping in, be sure to evaluate carefully. Now, let's shift to the other top performers of the week on the BRVM. Coming in second place behind Unilever CI is Filtisac CI, which rose by 11.21% to reach 4,800 francs CFA. This gain reflects renewed investor interest in the packaging sector, especially given the recovery in agricultural exports. Filtisac also benefits from steady structural demand, thanks to its contracts in the cotton and cocoa industries. Third place goes to Sitab CI, which gained 8.08% to close at 19,995 francs CFA. This rebound follows the announcement of an increased dividend, now set at 2,143 francs CFA. This represents an attractive yield of 10.72% as of July 25, 2025, a strong incentive for income-focused investors. Turning to the index performance, the BRVM market continues its upward momentum. The BRVM Composite Index, which tracks all listed stocks, rose by 1.45% to end at 301.40 points. That brings its year-to-date increase to 12.82%. In parallel, the BRVM 30 Index gained 0.67%, closing at 152.79 points. The BRVM Prestige Index also advanced, rising 1.39% to reach 130.97 points. This broad rally has been fueled by three key sectors: food and beverages, up 10.09%, tobacco, up 8.08%, and packaging, which rose 5.46%. These sectors are often considered defensive, and their resurgence suggests investors are rotating back into safer, more resilient segments. However, it wasn't all good news this week. Despite the index gains, the market remains mixed. There were 24 stocks that declined in value compared to just 19 that gained. This imbalance shows that the week's performance was heavily concentrated in a few large-cap stocks. Among the biggest losers, Bernabé CI dropped 5.20%, closing at 1,275 francs CFA. It was followed by Onatel Burkina Faso, down 4.61% to 2,380 francs CFA, and BOA Senegal, which lost 4.03% to close at 4,290 francs CFA. Let's now turn to the bond market. The BRVM bond segment also saw modest progress this week. Total bond market capitalization increased by 0.05%, closing at 10,159.59 billion francs CFA. In terms of volume, 5,999 and 356 bonds were traded for a total value of 5.86 billion francs CFA. The standout performer was the 10-year sovereign bond issued under the TPCI program with a coupon of 5.80%. A total of 410,000 units of this bond changed hands, worth 4.1 billion francs CFA. This single security accounted for nearly 70% of all bond transactions for the week. Its weekly turnover ratio was 4.66%, signaling strong demand among both institutional and individual investors looking for stability. So, what are the key takeaways from this week's market activity? First, Unilever CI continues to dominate headlines, but the rally is driven more by sentiment than by fundamentals. Second, defensive sectors are seeing renewed interest, with stocks like Filtisac and Sitab offering solid fundamentals and income potential. Third, the bond market remains active and presents good options for conservative investors. And next week, there are several stocks worth keeping an eye on, some for momentum, others for potential rebounds. Daba Pro subscribers will receive full recommendations and exclusive insights tailored to their portfolios. If you want to know what stocks deserve your attention next, now is the time to take action. To receive weekly stock recommendations, enjoy exclusive research, and reduce your investment fees, subscribe to Daba Pro. With Daba Pro, you don't just follow the markets, you stay ahead of them. That's all for today's episode. Thanks for listening to the Daba Markets Talk podcast. We'll be back on Monday with another update. If you enjoyed this episode, please leave a rating, follow us, and share with friends. Remember, this information is for educational purposes. Always do your own research or consult with a financial advisor before making investment decisions. And download the Daba app on your app store to start investing in African stocks, bonds, and manage portfolios through your phone and find other helpful content. Until next time, keep learning and keep growing your financial knowledge.